so honored to be here with the legend himself, executive chairman, founder of MicroStrategy, and the person that so many of us learned about Bitcoin from, because there's no one that can explain it quite like Michael Saylor. So I have several topics and themes that I want to cover, but knowing Michael, we might get through only a couple of them, so let's start right away. Why should corporations adopt Bitcoin as a treasury reserve asset?
Good question. I think it's clear we're living in an inflationary environment, and all the currencies in the world are at best pegged to the dollar, and at worst they're weakening faster than the dollar. So traditionally, the treasury reserve asset of corporations everywhere in the world is either cash or a cash derivative like sovereign debt. And if we take the example in the United States, a company like MicroStrategy would have, if we had $500 million in the treasury, we would have $500 million of treasury bills yielding 3% or 2% interest. Why would a company want to own Bitcoin in its treasury? Well, I'll take two cases. One is if you're a Western company, and the second case is if you're in the developing world, like in South America or Africa. So in a Western country, you have a treasury asset which is yielding 3%, but the rate of expansion of the money supply is anywhere from 7 to 10% a year for the past 90 years. We calculate the rate of expansion of the US dollar for the last 90 years is about 7% a year. And so against scarce desirable assets, you're losing half of your treasury every 10 years under the best of circumstances, assuming that there's a spread of 5–6%. And so in the US, under normal times, the reason you would own Bitcoin is because you have a chance of appreciating the asset value of your balance sheet. And in difficult times, like over the past 2 or 3 years, the money supply has been expanding about 14 to 20% a year. And in that case, you would do it because you've got a negative real yield of minus 15% in the Western world. So on $1 billion, it costs you $150 million in purchasing power to use treasury bills as a treasury asset. In the rest of the world, it's a little bit simpler calculus. Like if you're in Argentina or Venezuela or Bolivia, if you have treasury assets in the local currency, you've got an inflation rate that's effectively 40 to 100% a year, you literally can't have a treasury. Whatever money you have in a treasury of your corporation in a weak currency like that is going to zero within the decade, and maybe it's going to zero within 36 months. So in their case, they then have to figure out, how do I swap out of a weak local currency to something stronger? The conventional view would be switch from the local currency to the dollar. And the problem with that is you can't buy dollars without going through the conventional banking system. So if you ended up with $1 billion of pesos and you converted it to $1 billion in dollars and you had it in a local bank in Lebanon, what happens is the Lebanese banking system sells $100 billion worth of dollars, but only has $10 billion in custody. And so when people try to redeem their dollars, the bank fails. FTX failed by not having assets, but Silicon Valley Bank failed, and First Republic Bank failed for the same reason. So if you end up holding dollars in a fractional reserve bank, and they're all fractional reserve banks, then when there's a run on the bank, you lose your treasury assets and you're bankrupt. So the reason you would want Bitcoin if you lived anywhere outside the US is because your currency is going to zero and the banking system is not trustworthy, and the odds that it's going to default on you are sort of 1 in 10. In Russia, the entire banking system failed in, I guess, 98 or so. And about every 20 years in a lot of countries, the entire banking system collapses. When the banking system collapses, the playbook is your local currency is devalued, then your foreign currency reserves, like the dollars or the euros, get converted to local currency, and then they get devalued and frozen. And so you really can't have a treasury. So you end up basically starting from scratch every single year. In the US, we haven't seen large corporations lose their deposits in dollars or in treasuries in recent memory. But what they are losing is anywhere from 5 to 10% of their treasury value every year for the past 100 years. So that's the reason to use Bitcoin as a treasury reserve asset. It's theoretically going to appreciate anywhere from 20 to 40% a year ad infinitum. When it reaches saturation, it appreciates 5, 10% a year, and you can count on it appreciating versus fiat at something in the range of 7 to 10% a year forever, because fiat currencies will always inflate at 7 to 10% a year forever.
I appreciated your analogy before that when the oxygen is getting sucked out of the room and you see an oxygen mask drop from above, you run to it, and Bitcoin is the oxygen mask. I know that CNBC gave you a nice shout out yesterday saying MicroStrategy stock up 130% over the year. So how has MicroStrategy benefited from its Bitcoin strategy?
MicroStrategy had $500 million in cash in the summer of 2020, and it was yielding 0. And the likelihood that $500 million in cash is going to be worth $5 billion in cash is 0, ever. There's no way you can get an appreciation of the dollar on the dollar. And the likelihood that the $500 million in cash was going to yield an interest rate greater than the inflation rate was 0. Right now, the inflation rate, or the interest rate in Argentina is like 81%. The official inflation rate is 105%, but the actual inflation rate's probably running 150%. So when you get high inflation, when you get high interest rates on your government bonds, you're still not winning. And when you have low interest rates on government bonds, like 1, 2, 3%, and the money supply is expanding at 10%, you've got a negative real yield. So we knew we were stuck in a quandary. And so we either had to return all the capital to the shareholders and decapitalize, and then we would have had a company valued strictly on the forecast of future cash flows. So if you get rid of all your capital and you're living off of cash flows, you forecast the next 20 years of cash flows, you discount it back, and you adjust for the likely inflation. And you have this wildly gyrating P to E ratio, and you can have great periods and horrible periods, but it is a roller coaster you're on. So when we adopted Bitcoin as a treasury reserve asset, we started by converting $250 million to Bitcoin, and the day after we had $250 million of Bitcoin and a Dutch auction to buy back $250 million worth of our stock. What happened in rapid succession is our shareholders didn't want to tender their shares, so we bought another $175 million of Bitcoin. Our stock traded up, Bitcoin traded up, so we bought another $50 million of Bitcoin. And then we succeeded, we went from there to having our stock appreciate, Bitcoin appreciate, and we were able to raise in succession $650 million in a convertible bond that yielded 0.75% interest, then $1 billion in a convertible bond that yielded 0% interest, then $500 million in a junk bond at 6% interest, which is 6.25% interest, and right now the 3-month rate is 5%. So we got long-term debt at 6% interest. Then we were able to raise $1 billion in an equity offering at a stock price which was 5 times higher than the stock price that we had when we started on this strategy. Then we were able to raise $200 million by borrowing against the Bitcoin. Then we were able to raise another $350 to $400 million. And along the way, we were able to generate more cash flows. So the short of it is, today, our enterprise value is more than $6 billion. And our enterprise value 32 months ago or something was $600 million. So our enterprise value increased by a factor of 10. And then we had a $500 million liability. And today we have about $4 billion of Bitcoin. And if Bitcoin's been appreciating at about 50% a year for the past 3 years. But let's say Bitcoin only appreciated 10% a year. Well, we will generate $400 million in investment income off of our balance sheet. And if Bitcoin appreciates at 20% a year, we generate $800 million to $1 billion a year of investment income off of our balance sheet. Whereas our option, if we had stuck with the treasury as our treasury reserve, or the dollar as our treasury reserve is, we would have had to return that cash to the shareholders, decapitalize the entire company, and it would have been a liability. And so we would have basically been stuck with 2,000 people working as hard as they can. And if the 2,000 people work as hard as they can and do everything perfect, they could generate $50 to $75 million a year in operating income. So the benefit to the company is we in essence, fully endowed the entire corporation, and that endowment allows us to continue with our mission comfortably of developing the world's greatest business intelligence software. And we bulletproofed ourselves against inflation, because in the event that the dollar inflates at 20% a year, Bitcoin will probably appreciate at 40%, and so we will generate billions of dollars a year. And if the dollar doesn't inflate at all, if you ran the entire currency system of the world perfectly with zero inflation, Bitcoin will continue to appreciate in value because of the technical utility of the digital asset and all of the opportunities for security and cybersecurity and payment applications. So we were able to convert the company from a poorly capitalized corporation with a financial asset that had no appreciation capability or yield to a company that has a multi-billion, in this case $4 billion asset on the world's dominant digital monetary network that is spreading everywhere like wildfire.
We'll circle back to those technical utilities, because I think it's important to cover that as we move more and more into this digital economy, digital era with cyber warfare and cyber control, and how Bitcoin really can protect not just individuals and companies, but also nation states as well. Zooming out, we have some regulatory hurdles ahead and also some developments that are going to impact Bitcoin positively. So how have all the recent regulatory developments impacted Bitcoin so far?
There's a crypto crackdown going on right now, and that crackdown is on crypto exchanges, crypto asset securities. That is, there's 20,000 crypto tokens that are substantially all securities. And then on cryptocurrencies like the stable coins. That crypto crackdown is really good for Bitcoin. And so the way it's impacting Bitcoin is as the exchanges delist those crypto securities, and as the public loses confidence in crypto exchanges, cryptocurrencies, and crypto securities, all that capital is flowing into Bitcoin. Because Bitcoin is the ethically sound, technically sound, economically sound crypto asset. It's the king of all the crypto assets. And so ethically sound, meaning in this case, it is an asset without an issuer. It is a commodity. So you can't serve as global money for the world unless you're a commodity. If you're a security, then that means you're an asset with an issuer controlled by a small group of people. That's an attack surface, plus that's regulated as a security by the SEC and every other security organization. So as the challenge for Bitcoin has been rising through the confusion of 20,000 other cryptocurrencies and the fact that hundreds of billions of dollars have been drained out of the ecosystem into cryptocurrencies like the stable coins. As the stable coins actually lose the confidence of the public, people are going to sell the stable coin, they're going to buy Bitcoin, and then all of that capital that's sitting on crypto exchanges and sitting in the cryptocurrency networks like Tether and Circle and the like, it's all going to flow back into BTC because Bitcoin is the reserve asset of the crypto ecosystem. And the network, Bitcoin, is the risk-off, bulletproof, most secure settlement network in the world, and of course, most secure settlement network in the crypto ecosystem. So Bitcoin is not crypto, and every time you see something that's scary about crypto, really, you just got to keep in mind that everything that's bad for crypto is good for Bitcoin. And that's not well understood by many people in the system. And it's certainly not well understood by people that are committed to the crypto economy as opposed to the Bitcoin economy. But every single action that's taken place over the past 6 months, if you read them, if you read all of the lawsuits, the CFTC lawsuit against Binance, if you read the lawsuit by the SEC against Bittrex, if you read the Custodia denial letter, if you read the other securities lawsuits, there's one word conspicuously missing from all those actions, and the one word missing is Bitcoin. Those actions are all against other assets and other exchanges and other networks. And all those other networks have slowed down the adoption of Bitcoin. So as those networks decapitalize and as they demonetize, people that believe in the future of the crypto economy and they believe in digital assets are going to sell those other assets. They're going to buy Bitcoin. They're going to when they pull their Bitcoin off the exchange, they're actually putting it onto the Bitcoin network. They're strengthening the Bitcoin network. If I buy $10 billion of Bitcoin and I put it at FTX, and then FTX rehypothecates it and loses it or steals it, it makes the Bitcoin network $10 billion weaker. When I put the Bitcoin in BlockFi or put the Bitcoin in Voyager and then they lose it, or I give the Bitcoin to Alameda or Three Arrows, and they loan it, rehypothecate it, trade it, lose it, steal it, it makes Bitcoin weaker. So the failure of Alameda and Three Arrows and FTX and Celsius and BlockFi and the flight from the crypto exchanges is actually making Bitcoin stronger, more robust, more anti-fragile. And so I think that all these, the entire crypto crackdown is actually accelerating institutional adoption and retail adoption of Bitcoin. I think it's also accelerating the education process. I think a year ago, when you said Bitcoin is a commodity, the rest of the assets are securities, everyone looked at you with a glazed eye, and they don't even know what a security is, and they don't know what a commodity is, and they don't know what you just said. Okay? But today, if you listen to announcers on CNBC, or you look at the front page articles in Bloomberg or Wall Street Journal or New York Times, or even when you listen to politicians, congressmen, senators talking about the crypto economy, now they say, well, I understand Bitcoin's a commodity and these others may be securities and we're not sure about them. And so you see an entire generation of politicians, lawmakers, regulators, media, journalists, investors, and maybe more importantly, even all the crypto entrepreneurs that grew up in the crypto economy, you see all the crypto media, even they are all of a sudden studying securities law, studying the difference between a security and a commodity, educating themselves, you know, and you'd like the education to be quick and easy and painless, but it isn't always. Sometimes it's all the influencers getting sued for promoting FTX or sued for promoting FTT token or some dog token or some whatever. You know, that's an educational teaching moment. And I think that if, you know, if I came up with like yo-yo coin and I went to some rock star and said, I want you to market yo-yo coin for me, today they'd probably say, well, wait a minute, I heard that Taylor Swift said that wasn't a good idea. And I don't want to get sued like somebody else got sued. So I think that we're crossing a chasm. The industry is growing up. It's rationalizing, and rationalization sounds like a Harvard B School word when you read it in a case study, but rationalization means, it means sometimes a painful pruning of a lot of good ideas poorly executed, and that's what we're seeing right now. And the most important thing is eliminate the confusion, because there's infinite money. There's $500 trillion of monetary instruments floating out there. And if the people with that money just acknowledge Bitcoin is a legitimate asset class, Bitcoin would appreciate in value by a factor of 10 overnight. Just by knowing that Bitcoin is not crypto and it's a legitimate commodity. You wouldn't have to establish anything other than that. If they ever figure out what it really is, not just a legitimate asset class, but a bona fide digital scarcity backed by more digital energy than anything else on the planet, it will go up by another factor of 10. But we're still early in that educational process, and the regulatory crackdown is part of that process.
Yeah, who would have thought that Taylor Swift and her team knew the difference between Bitcoin and crypto, as opposed to some of the hedge funds say that gave money to FTX and the likes. I was actually in Washington, D.C. about a week ago for the Bitcoin Policy Summit, and you're right, Michael, it's really surprising that so many people actually do really understand the space. I was listening to some of the policymakers, and they understand the difference. They're just waiting to move, it seems. So we're moving in the right direction with education, but we still have some work to do. But turning back to the idea of Bitcoin as a treasury asset for businesses, what is the outlook for Bitcoin going into the reserves of companies over the next few years?
The outlook? Yeah, I think the outlook for Bitcoin is really good for a number of reasons. I won't say all, but many, if not most, of the bad actors that have been rehypothecating Bitcoin, shorting Bitcoin, and undermining it, anyone that didn't believe in it and wanted to short it, they've all been wiped out, right? So the parade of all of these entities that went bankrupt, starting with Terra Luna all the way through Three Arrows and the like, they've been wiped out. So a lot of the really bad leverage or irresponsible leverage in the system has been wiped out over the past year. And that's been a drag on Bitcoin. The second drag is all of the crypto asset security tokens, the yo-yo coins of the world and the dog coins of the world. They're actually getting rationalized right now with a lot of regulatory pressure, and the average person, the retail person that thought there was no difference, is getting a big education from the crypto industry and from the regulators that their yo-yo coin is not comparable, either ethically comparable or the like. I think the Bitcoin network has never been stronger. The Bitcoin network is backed by digital power, and a lot of people don't understand what backs it, but it's 350 exahash, and an exahash is a measure of digital power. That means that the network has between 10 and 15 gigawatts of electricity pouring into millions of ASIC miners, generating SHA-256 hashes, 350 exahash of them. That collectively is a $20 billion to $30 billion investment, or capital investment. The hash rate's at an all-time high. It's going to keep growing. Bitcoin transactions have reached an all-time high. The demand for transactions on the blockchain is surging right now. There's an acknowledgement that Bitcoin is the most secure computer network in the world. That's what people are beginning to realize. And as they realize this is the most secure computer network, then technologists are starting to realize that, well, if I wanted to store $1 billion on a network, then I want the most secure one. But if I wanted to send $1 billion from point A to point B, I want the most secure one. If I'm going to build any application on top of a network with a layer 2, if I'm going to do roll-ups or do DeFi, or if I'm going to do channels, like if I'm going to do payments, if I'm going to do any kind of inscription, any cybersecurity app, I'm going to want it on the most secure base layer and the one that's hardest to attack, and that's Bitcoin. So the outlook for Bitcoin as a technology has never been stronger, because most of the people in the crypto industry are realizing that their yo-yo token is not going to be a base layer for their innovation. And they're being driven to Bitcoin because they need a commodity and an ethically sound, technically sound asset. So there's a recognition and a migration there, and that's actually going to feed Bitcoin. I think that in the investor community, at this point, you have 24 to 36 publicly traded companies that have Bitcoin in their balance sheet or as part of their P&L in some material fashion. There isn't any publicly traded company that is able to, in a stable way, use other altcoins on their P&L or their balance sheet. So what you see is the public companies like the Bitcoin miners and MicroStrategy have actually introduced Bitcoin to all the institutional investors, and there are billions and billions of capital flows in the ecosystem because of that. I think that the regulators are educating public investors that digital commodity is not just superior to a digital security, but maybe it's the only thing that's investable. So if you weren't sure whether or not Bitcoin was a commodity or a security, it became clear over the past 12 months when the head of the SEC said it like 6 times. And then when they asked the head of the SEC point blank 5 times in a row, is the next best thing a commodity, he refused to endorse it as a commodity. So there's a very clear signal to the institutional investor right now that Bitcoin is the only investable asset in this space. But the other signal is that Bitcoin is legitimately an asset. And that signal has happened over the past 18 months when you had Jerome Powell, Christina Lagarde, you had Janet Yellen, you had Gary Gensler, and you had Ross Benham, the head of the CFTC, and multiple senators and Congress persons all say the same thing, which is Bitcoin is an asset. It is a digital asset. And so we've crossed the chasm. We started with, we had deniers. Bitcoin is a Ponzi scheme. It is tulips. And then we had skeptics, a whole set of skeptics. Bitcoin is too good to be true, therefore the government will ban it. There's still a few skeptics floating around that say that. Sometimes the Warren Buffetts of the world, sometimes Ray Dalio says it, sometimes he doesn't say it, but you have some skeptics. But for the most part, the mainstream consensus has moved into the camp of Bitcoin is an asset, uncorrelated asset. Not sure whether it's correlated or uncorrelated or what kind of asset it is, but it's an asset. They moved into camp 3. I think the outlook is particularly bright because now we're moving into a 4th category of investors, the technocrats. And the technocrats would say this is the world's first and greatest digital monetary network. It is a way that you can move $1 billion from New York to Tokyo in a nation-state resistant fashion. If you had to ship $1 billion of gold from New York to Tokyo, or from Tokyo, across China, to Kazakhstan, and you wanted to do that without getting interdicted by a nation state, it would be a worrisome thing. You'd need a battleship, or you would need, how do you fly over foreign airspace with billions of dollars of gold and not worry that the plane will crash, someone will shoot it down? Whereas if you wanted to move $1 billion of Bitcoin anywhere in the world, you could do it in a few minutes, and you could be reasonably sure that a nation state can't stop it. And let me put that in perspective. If you wanted to stop a Bitcoin message and you had $100 billion, and you could take the $100 billion, you could attempt to buy every Bitcoin mining rig produced for the next 4 years. If you brought it all online, you could slow down the message maybe by 20 to 50%. Maybe instead of it taking me 20 minutes, it would take me 40 minutes. After spending the $100 billion in 4 years, if you got lucky, that's the best you could do. And probably that wouldn't even work. So that gives you a sense of just how nation-state resistant Bitcoin is, now censorship resistant. It is a bulletproof way to move incredible amounts of value around. It's the only way the human race has figured out to move $1 billion of value from here to 30 years in the future. We don't have another way to do that, or 100 years in the future. So Bitcoin itself is emerging as a great technology achievement, but the technocrats are going to be won over by Lightning, because Lightning is the ability to move money at high frequency at the speed of light in a programmable fashion. And I've used this example before. You've heard it, but I think it's demonstrative. If I have a $100 bill and I want to send it to you today in the banking network with credit, I send it with Apple Pay, or I send it with a credit card, or whatever. I can send it to you. It'll take 30 to 45 days for final settlement, and 2.5% of the money will go to the bank. If you want to send the $100 bill to the next person, and they send it to the next person, if you want to move that $100 bill 40 times, it'll take you 6 years, and all of the money will end up in the bank. That is, the bank will keep it all. You will have nothing left. So moving money in a credit economy based upon conventional banking means it takes 6 years, and the banks take all the money. And on the Lightning Network, if I wanted to do the same thing, it would take 60 seconds, and you keep all the money. And so the difference between Lightning and the conventional credit payment network is like it's 1 million times cheaper, 1 million times faster. And I haven't even got to the frequency part, which is, if you want to move the money back and forth at high frequency, or if you want to program it at the speed of the internet, you just can't do it with the existing credit card, credit network, et cetera. So the constituency that has not been a Bitcoin investor until this time period are the technocrats, the people. There was a time when Carl Icahn decided that he was going to buy Apple stock. And when Carl Icahn bought Apple stock in quantity of billions and billions, all of a sudden the entire mainstream investment community looked at that and they said, oh my God, Apple is not a scary tech stock anymore. It's actually, it's a consumer good, and it's branded, and this mainstream investor is going to buy it. The multiple tripled. And Carl Icahn made more money. And then when Warren Buffett actually got involved, Warren Buffett probably made more money on Apple stock in 36 months than he made on every other investment in his entire life. And all they did was they bought something which people thought was kind of scary, and then they legitimized it, and then an avalanche of money came into it. So I think where we are right now is the technology investors that made Facebook and made Apple and made Google, and they made trillions of dollars off of that, and Amazon and Microsoft and the like, they're starting to notice Lightning. They're starting to notice Bitcoin. It's still like year one of that, but you will see crypto VC come into Lightning, and they'll be financing Lightning-based companies. You'll see tech investors getting involved. And as they get involved, they're going to be investing in Bitcoin at this new base after the rationalization and after the deleveraging. I think that kind of energy from mainstream investors and technical investors drive us on the next bull run.
Well, let's unpack Lightning a little bit more and this need for a secure transactions protocol and the ability to establish trust between counterparties using ethical money. So why and how should corporations integrate Lightning?
You know, the benefit of Lightning is right now I have this 2.5% fee and this latency to move money around, and Lightning promises you can move money for a 1/30th of a penny in a second or two. So it is a friction-free way to move anything of monetary value, and that's powerful enough that you can't you can't ignore that if you're in the payments industry. Lots of retailers, all of our retail customers, they complain bitterly about having to give 2.5% of their revenues to credit card companies. That's a massive tax. Now, the irony is it's 2.5% or 200 basis points or more after 40 years. That system is not getting more efficient no matter what. Whereas with Bitcoin, you could do it for a couple of basis points. And with Lightning, you can do it for fractions of basis points. So that's one reason to be interested in it. The second reason to be interested in it is you can change all of your cybersecurity protocols and inject new levels of security using Lightning. We're living in a world where we suffer from denial of service attacks. Our company gets 40 denial of service attacks like every week, like forever. We're always getting them. Someone's attacking you. The solution to denial of service is make something expensive or just a little bit expensive. If you have to pay a penny or 5 cents or a fraction of a penny to do something, that small friction defeats all of the bots and all the cybersecurity attackers and the DDoS attackers without materially impacting legitimate customers at all. The reason that people haven't implemented that sort of defense is because the existing credit networks have a minimum charge of $2 or $5 and a minimum fee of 1/4 and 2.5% fees, and the settlement is 45 days. How do I charge somebody a penny in 1 second or a fraction of a second if the minimum is $5 and you have to wait 45 days for the $5 to clear, right? So the existing networks are too slow to actually provide security or payments functionality in the existing world. A third reason for people to embrace Lightning is to do things like MicroStrategy is working on, which is to directly reward or directly stream money to your customers or your prospects or your partners. Right now, the way that we digitally drive behavior is we give tens of billions, if not hundreds of billions of dollars to Google and Facebook and digital advertisers. Well, I'm giving Facebook $10 billion so that they will drive traffic to my website so I can convert those prospects into customers. But I could just give the billions of dollars to the prospects or to the customers directly, not with the credit card network because they require KYC and there's too much friction and there's too much latency. But if I could actually stream money with Lightning, I can bypass very inefficient advertising models and I can go direct streaming models for customer acquisition. And of course, I can flip the other way. I can have direct streaming models streaming from my customers to me you know, as a revenue model. So these new models for marketing, for sales, for services, for security, they're all revolutionary. You can build monetary premiums into the product or into the service with Lightning on a continuing basis because of the low impedance and the high frequency. Like, for example, you know, I'll give you 100 Satoshis for every minute you're watching my video, or I'll flip it and you'll pay me 100 Satoshis for every minute you're watching the video. All of these new business models are possible, including even things like, well, if you buy my book at Amazon and then you write a book review, I will give you 100 Satoshis every time one of my other customers likes your review and buys the same book, or just hits like on the review, and maybe you become an influencer who reads books for a living, writes reviews, and gets paid by the platform for the engagement you drive for the online bookstore. There's a million of those things, right? And I think Nostr generated incredible excitement because they allowed people to post things on Nostr, and instead of hitting like and getting paid nothing, you hit zap and you get paid something, or someone hits zap and they give you something. So the idea is, like, why is it I'm putting brilliant content on YouTube or Twitter and then they're getting paid by advertisers for my brilliant content? Why don't I just get paid for my brilliant content? So I think, like everything, it's a new idea. It's like the internet. There will be 10,000 companies launched. 99% of them will fail, but eventually everybody will be integrating their product or service into the internet, and there will be some brand new revolutionary companies like the Googles, like the Amazons, that will rise out of that chaos and be monstrous. And you know, it's like 1991 with the internet. It's like there's something there, but we're not quite sure where it's going to go. We're like year 1, year 2 in Lightning, and you wouldn't want to ignore it, because if your competitor rolls out something and manages to master it, then you could suffer.
Yeah, and I learned that you want those SAT rewards too, right? If MicroStrategy offers a reward for being on time to a meeting, you're not going to be 5 minutes late because you said you want those sats too.
Yeah, we tested this on ourselves. We actually rolled out Lightning to all of our employees. And so when we did it, we spun up Lightning wallets for everyone, and then we plugged it into our Zoom meeting structure. So the rule was, if you have a company-scheduled Zoom and you show up on time, you get a bunch of Satoshis as a reward. And if you show up 1 minute late, you don't. And so I found myself logging in, and then I looked up in the corner of my extension and I saw that I just got the Satoshi reward, and I thought that was really cool. It was instant. And then I saw another meeting later in the day, and I thought I'm going to be late to that, and it got me really stressed out, and I realized that like, you can never have enough Satoshis. It is the lesson. It doesn't matter how many you have.
All right, well, you sort of already answered this, but if we can get a little bit more specific, what do you see as the most compelling applications of Lightning as we move into the future, and as corporations, even some that are here, begin to adopt it?
You know, I would say there are going to be hundreds or thousands of categories of applications of Lightning, and so for me to tell you there's one that's the answer would be a little bit too presumptuous, but I am excited about a few areas. The obvious areas of excitement are payments. The ability to basically pay someone instantly, cash final settlement in a split second, especially cross-border. You know, if you gave me $1 billion and 20 years and 1,000 engineers and 100 lawyers, I could not figure out how to send $100 from here to Nigeria. I could not figure it out. Without a protocol like Lightning. In a conventional fashion, it's just not going to happen. So the ability for a South African company to interoperate with a Nigerian company, with an Argentine company, with an American company, with a Japanese, with a Korean company, with 187 Silicon Valley startups, the fact that they can interoperate is, I think, pretty compelling. I think the other thing that's not lost upon me is I have a blue check from Microsoft that goes on my email. And it's very difficult to plug it in. I have to install this cryptographic certificate that certifies my email. I have another blue check with Twitter. That was hard. I have another blue check on Instagram. That was a nightmare getting that one. We have a black check on a YouTube channel to certify that. I don't have a check on some Facebook account, and then I have a blue check on my iMessage, and none of them interoperate. So what you have is all of these different walled proprietary trust networks, and they kind of work well within each other. But there's not a week that goes by that a friend of mine doesn't say, hey, you contacted me on WhatsApp about some Bitcoin trading idea, and what was that you? Like, no, I don't want your Bitcoin. And no, I'm not giving you trading ideas. But there are 48 fake WhatsApp accounts that are spun up every single week from me. We literally have 2 firms, and all they do is scrub fake Michael Saylor accounts off of 20 different social media platforms. So I don't know how to get certified in Telegram or get certified in WhatsApp or get certified in fill in the blank, right? So I think cross-authentication is pretty compelling. I think any cybersecurity application where you can either use it to authenticate or you can use it to prevent denial of service attacks, I think those will be really compelling. I think all the digital marketing applications will be compelling. I think that there will be products that will be created and conceptualized that we haven't figured out yet. You know, like, why do I want to pay you life insurance premiums for my entire life and have you invest it in if I gave you life insurance premiums in pesos for the past 20 years, and if I gave you $1 billion in pesos, you would have like $10,000 worth of life insurance right now, right? So there's all sorts of defective financial products, and there's all sorts of existing services that have yet to be invented, and I think Lightning will open the door to all of them. I think there will be some where entrepreneurs create stuff where they just pull it out of the ether, and then there'll be lots of examples like you see with Cash App and with Fidelity, where you had really good businesses that were just made much MicroStrategy. We had a business that it was nothing, and then it was worth $1 billion, and now it's worth $6 billion. So there'll be a lot of businesses where there was something there, but it's made much, much better by injecting Bitcoin or Lightning into it. And there'll be these random new things that will come out of the blue that'll just, you know, blow us away.
I would love for you to elaborate on the need to be able to authenticate something cryptographically in the future, because we are moving into a world of more AI. And I don't want to out the person, but there is a speaker here at the conference who was approached by someone who thought that he was talking to the real version of him online, and it turns out that wasn't him, and he sent money to him. And so those fake profiles, the impersonators that you mentioned, it's a very real problem, and it's not just going to happen to public figures. It will happen to everyday people where someone's calling, pretending to be someone's family member or friend, trying to extort something. So how can Bitcoin fix this?
I think Bitcoin maximalists, they don't think of Bitcoin as just a monetary network. They think of it as a trust network, the ultimate network for conveying trust across time and space. And so Satoshi, we think, mined about 1 million Bitcoin and disappeared forever. And that Bitcoin is worth $30 billion today. never been touched. And so what does the network do? Well, it stored something worth $30 billion against every attacker on Earth. All 8 billion people with a $30 billion incentive, no one could crack it. It's still there. You can see it transparently. And yet we know that Satoshi could prove that they control that 30 billion. They could move it, and they could authenticate it in a second to the entire world, you know, because of public and private key cryptography. Just by digitally signing a message, they could prove it. And so if you extrapolate that or generalize that, what's going on right now is people are currently inscribing, they're doing inscriptions on the Bitcoin network, and they're inscribing documents. You can inscribe a Bored Ape, you can inscribe a contract, you can inscribe a message like Chancellor on the brink of a second bailout. You can inscribe lots of things. You can inscribe any document on the Bitcoin blockchain if you want to pay the fee, hold the private key, have it distributed to eventually hundreds of thousands and millions of nodes, know that it'll be there in 100 years. Maybe it's your last will and testament. You know, when I signed my last will and testament, the last time I did it, I'm sitting in a gazebo. I've got one guy sitting next to me, and he's signing on ink on a piece of paper. And I have a notary that showed up from Miami with a little stamp, like, you know, she stamps it, she stamps the paper, and then we dispatch with everything I'm ever going to have forever, with a little bit of paper and a little ink stamp and one signature, and it's going off into a safe. And I'm sure nothing could go wrong. Like, I'm sure that an AI couldn't figure out, you know, how to copy that if they ever had a photo of it, right? Like, I mean, couldn't literally a 6-year-old with a phone take a photo, counterfeit the entire thing, rewrite the entire will, and serve it up in 25 years and divert 17,732 Bitcoin, which I still have. I mean, they could divert it to wherever they wanted to divert it. So I asked, what's a better idea, right? Like, you know, you can take AI today, you can create a video of Michael Saylor in my voice with my face telling you anything you want to hear and upload it, and it's pretty convincing. Like, people are already making funny memes of it and rap songs, and you know, we laugh, we think it's cute. But it's not really funny when you think about yourself calling your banker in order to direct a wire transfer in your voice with your face. Then it's not funny anymore. So it's pretty clear that in an AI world where I can create any document and I can create any video and I can send any message, we need to move to a new degree of cryptographic authenticity. And that means two ideas, right? One idea is you need public and private key encryption. Yeah. And the second idea is the file needs to be uploaded to an indestructible, immutable Dropbox in cyberspace that no nation state, no corporation, and no malefactor can tamper with. And Satoshi figured it out 14 years ago. And not only did Satoshi figure it out, Satoshi actually gave us an example of a $30 billion file, put it in cyberspace, cryptographically signed it, disappeared forever, and said anybody that can actually crack Bitcoin can have the $30 billion, have at it. And nobody's cracked it. And so it seems to me it's only a matter of time before people say, well, why don't I just, instead of DocuSign to like a private, you know, single node, why don't I select the Bitcoin DocuSign option, and why don't I burn it into the Bitcoin blockchain? Because I know that with the, like, I think if you had $500 billion and you were a nation state, I think the best you could do is maybe just slow the Bitcoin network down by a factor of 10. You're not stopping it. I mean, we really have an incredibly immutable, censorship-resistant network backed by 350 exahash of digital power. And yeah, the obvious thing to do is store money on it, but the next thing to do is store your digital identity on it, and the next thing to do is store your last will and testament or a deed or any kind of important document. And of course, on Twitter, I mean, I have 3 million people that follow me on Twitter, so reasonably, if I put something on Twitter, they might believe it's me. But we'll get to a point where I can take that private key on Twitter, link it in a Bitcoin transaction, burn it in the blockchain, and then I can say to the entire world, if you get contacted on WhatsApp or iMessage or YouTube or whatever, and if it doesn't have that same cryptographic signature, it's not me. And I think that's just sitting out there incredibly compelling. And if not compelling, it's, you know, it's me calling my banker saying, you know, next time I call you and say something stupid, that's not me. Mm-hmm. You better ask me to cryptographically sign that message. And I think we will go to the point where most things are cryptographically signed, and the gold standard is cryptographically sign it and burn it into the Bitcoin blockchain, and that's an exciting opportunity.
I think that's such an important message moving forward, and I can't believe I got through so many questions. I have time for, I think, one more. So let's think about moving forward. You have shared, and so many of the speakers today shared, how Bitcoin and Lightning can delight the customers and businesses, but how can corporations move forward with Lightning and Bitcoin in a responsible fashion, being compliant?
Well, I think you start by noting that the ethical sound, technically sound, economically sound way to do this is using Satoshis as gas. Bitcoin is that digital commodity, and it's a scarcity. So you build using Satoshis, which is what you get when you use Bitcoin, and that's what Lightning runs on. And then as you are deciding what to do, I think you want to make sure you educate yourself fully. So you've already taken the first step, which is be here and learn about Bitcoin. Tomorrow is going to be a really educationally rich day, because you're going to hear from a lot of Bitcoin practitioners. You'll hear from Bitcoin or Lightning service providers. You'll hear from Lightning developers. You'll hear from people that have Lightning toolkits and Lightning platforms. You'll hear from people that have built Lightning applications. You'll see people with Lightning wallets. The entire Lightning protocol is a very rich and diverse ecosystem, and every single company has to decide how they're going to integrate with it. Are you going to be a wallet provider in your own right, like Cash App? Are you going to build a wallet into your mobile app, which is maybe your mobile app is primarily for airline reservations or restaurant reservations, and then Lightning will be a secondary piece of it? Are you going to build it out on your website? Are you going to be a custodian, or do you want to integrate with a qualified custodian? Are you a money transfer agent, or are you going to partner with a money transfer agent? There are going to be qualified money transfer agents and custodians in every jurisdiction on Earth, and the rules are going to change every month. And so that's a business in its own right. You have to figure out, what is your business? Are you an insurance company? Are you a bank? Are you a retailer? Once you figure out what your value added is, how do you want to build? Do you want to build Bitcoin into your marketing function, or do you want to take payments with it, or do you want to change the nature of your product and redefine it, or do you want to convert your product into a service? Right? All of these are possibilities. So I think part of this is visioning, and you have to envision how you can create a product that will delight your customer and expand your market by a factor of 10. After you've come up with your vision, then you decide how much of this you want to build versus buy. You'll find companies that'll probably build it for you. You'll find companies that'll provide you with infrastructure, and then you write to their APIs, and you may decide that you want to do a part of it. Clearly, your journey starts with understanding Bitcoin and understanding a digital commodity and why, if you can't answer succinctly why Bitcoin is ethically, economically, and technically superior to every other option, then you should just do not pass go, right? Go back to go, right? Do not go any further. Just stop right there until you know the answer to that question. When you understand the answer to that question, then you move on to answer the question, do I use Lightning as a, why should I use Lightning as a protocol? Right? Generally, the answer is to be interoperable in the world. And then after you understand that, the next question is, how much of this do I want to do versus outsource to another company or another partner? And once you've done that, then you can bring a pilot or a prototype to market, test it with your customers, take feedback, you know, and iterate until you find the right product market fit, right? I think the story of Cash App was they started in 2017 with a hackathon, and for between 2018 and 2023, they've been evolving successively richer offerings. With Fidelity, it's the same story. They were mining Bitcoin and working with it a decade ago, and they've been evolving their offering over time. With MicroStrategy, we started with Bitcoin as a treasury reserve asset, then it was the treasury reserve asset, then it was a strategy, you know, and then we got into Lightning and we got into other areas. So I think you have to let this evolve organically. The one thing you shouldn't do, and this is where people make the mistake, is you shouldn't be like the Silicon Valley VC that thought that crypto was cool, so they invested in FTX. They didn't do the work, they lost all their money, right? And that's how the free market works. If you're sloppy or in a hurry, you lose all your money. You should move forward in a thoughtful, responsible, progressive fashion where all the executives understand the base layer, they understand the layer 2, they understand what the layer 3 application is going to be, they understand the customer, and they're taking their time, they're building value because the responsible pursuit of these products and services is going to be durable, and the irresponsible, you know, sprint toward money, you know, is probably going to blow up in your face, as it has blown up in the face of all these crypto entrepreneurs over the past year. They all had one thing in common. They're all irresponsibly sprinting toward something too good to be true, and they were in a hurry to get there. And if they had slowed down, they would have realized investing in air tokens is a bad idea and it can't end well.
Bitcoin is a good idea, and you're right. First you understand it, and then you can start dreaming and envisioning what you can build with it and on top of it. And that's really how I started this whole day as MCs, talking about the dreamers that are changing the world. Bitcoin is going to allow us to dream bigger. Michael Saylor, thank you so much for being here. It feels like a dream for me to be here. Thank you so much to everyone for coming.